This was supposed to be the year when global growth got back to normal, but China, the world's second biggest economy, is slowing down, perhaps dangerously so. The world number 3, Japan, is contracting. France is flatlining, and the recovery of the Eurozone is weaker than hoped. As for emerging markets like Brazil, well, many of them are already in trouble. At a trade fair in Rio, they're feeling the chill wind from China's economic winter.
Because of the crisis, our exports of manufactured products are falling. The Chinese product is cheaper. We had hoped that with our currency devaluing more than 50% in the past 12 months, it would help us improve our manufactured exports to the USA.
How damaging for the world as a whole is a Chinese slowdown?
The Chinese slowdown is hugely important for the global economy. We've seen things like Singapore, a significant fall in Singapore national income in the second quarter of this year. Malaysia, Thailand, way down. Japan, again, negative growth in the second quarter. Big slowdown in New Zealand and Australia. And very big slowdowns, of course, in the big commodity producers. Russia is now clearly in recession. Brazil is now clearly in recession.
So investors who can place their money more or less anywhere on the planet have pulled £600 billion out of emerging market economies since June of last year, which is twice the amount they pulled out after the 2008 crash. So emerging economy stock markets are falling to levels not seen since 2009, and their currencies are tumbling, in some cases to levels we've not seen since the Asian crisis of 1998. For example, Kazakhstan's tenge currency fell a staggering 23% today. Now, in case you think none of this matters to us, it's worth remembering that developing countries contribute half of the world's income and for years have contributed 80% of all global economic growth. So, if they're poorer, in the long term, we'll be poorer too, because we're all connected in a globalised world and there'll be less appetite for what we sell. So, how bad could it get?
I don't think we are close to another financial crisis remotely like 2008. We have unresolved problems in the balance of the global economy, the real economy, and its over-reliance on debt, which were there in 2008, and they're there, and in some senses, even worse today.
Two apparent exceptions to the global slowdown: the United States and the United Kingdom. In both places, the authorities want to put up interest rates a little in coming months. But if we could cope with a rise in the cost of money, it's not clear that weakening connected economies elsewhere would find it easy.